Stock of the day, Coles, the other big supermarket, of course, holding its dividend steady at 36 cents a share, despite a drop in half-year net profit. Statutory net profit coming in at $589 million, down 8%, but above market expectations. Net profit from continuing activity slipping at 4% as the cost of doing business rises and moderating price increases at its top revenue-generating supermarkets division impacted earnings, where revenue was up 6.7%. Looking ahead, the company flagging an increase to financing costs in the second half, with earnings to be impacted by a net loss on property of about $10 million. Also reporting a 2% slip in liquor sales revenue in the first 8 weeks of the third quarter, while supermarket sales revenue having risen 5% in that period. And the market liking what it's hearing at the moment, those shares up more than 6.5% in this morning's trade. Francesco, how do you look at this result then? Maybe comparing it with Woolies, certainly a cleaner looking result, isn't it?
I think that's what the market's doing, just comparing it to Woolies and going,
yeah,
the Coles beat expectations from consensus and Woolies didn't, so let's buy Coles instead of Woolies. But I personally think Woolies, longer term is a better proposition, particularly where the share prices come back to now. The fall in Woolies' share price was a lot more to do with the management rather than the results, I think. And I don't have a problem with the way Woolies appoint new management. They mostly come from the shop floor, so there's good retail experience there. And look, I find it hard to be buying Coles now that it's rallied up as high as that chart shows you. But all things pointing towards a good result for the full year for Coles as well. So maybe there's probably a little bit more upside on the back of that. Look at our recommendation there, guys have gone to a light, and on this stock, I probably wouldn't be as harsh, but I'd probably more at a hold.
Do you reckon there is any regulatory risk ahead, given the ACCC taking a look at the supermarket dominance there? There's a lot of political pressure, isn't there, at the moment?
There is. Look, there's always regulatory pressure, not in every industry. We've seen it in our industry over the last 5 years as well. So it does.
Which is taking its toll.
Yes, and it does take its toll on margin. But the Coles and Woolies, they're big enough to sort of navigate their way through regulatory issues and not incur large expenses. The smaller retailers probably not so much. But I think yes, it's a risk. I don't think the government can impose huge regulatory impositions on the retailers. Otherwise, they're just going to. It'll increase their costs. So therefore, all it's going to do is squeeze their margins, and retailers aren't going to be better. Consumers aren't going to be better off for it.
Really. Yeah. Ben, what are your thoughts?
Yeah, pretty with Francesco and all of that. I think the surprise has more been that everyone was expecting this is probably an industry-wide slowdown. It's flagged by Woolies, and it has turned out not to be. The analysts, it's always interesting in results what moves them. One of the big things they did well in the last half was theft. They had a lot of issue with theft in their stores, and they've seemed to have really stamped that out, and that's been a good win for the business. But look, I reckon Woolies does look interesting. If you keep $1 or $2 cheaper, I think it would start to look like a pretty good buy. You've got a bit of a messy CEO transition, the regulatory talk, and I don't think there's any regulatory threat to the supermarkets.
Why you think it's all talk at the moment, is it?
Well, what are they going to do? The only thing they can do is potentially force them to lose some market power. But all that's going to do is, like Francesco said, that you're buying 1 million Dove deodorants or 3 million. It's cheaper if you buy 3 million, and the margins. The supermarkets aren't making crazy.
Well, the consumer can't exactly
margins.
Walk, can they?
They'll just end up paying more.
Yeah.
Which will fuel inflation, and everyone will be worse off. So maybe they've got too much market power, but that's where they're at, and I don't see that getting unwound. And plus, like Amazon, etc., they are continuing to grow very aggressively in this country. That would be the biggest free kick for an offshore multinational that you could probably give if you did do something there. So it's complicated. And I think it was more Brad Banducci, like it was not well handled that last little bit, but he was actually really well regarded in the market. It's easy to forget Woolies was in a lot of trouble when he took over. They'd had a terrible time. And I think he did a great job righting the ship and returning the business to growth. And I think it was more the market was sort of disappointed he was moving on.
All right.
So hold on Coles.
Yep.
And I reckon Woolies is getting close to a buy.
Yeah.
And I reckon
right.
these stocks, to me, they're kind of more trading stocks. Like neither of them are growing particularly strongly. You saw that last share price chart of Coles. It's gone nowhere for 5 years. These are kind of the stocks you want to buy when they're really out of favour.
Yep.
And potentially let them go a bit into some strength.
Yeah. Actually, Francesca, would you agree on that? So you would have a hold on it as well?
On Coles or?
Yeah.
Yes, we've got our
obviously
analysts got
favouring
line, but I would prefer probably
Lighten.
more of a hold.
Yeah.
I'm probably a little bit more optimistic on Woolies. I'd
Right.
probably be happy buying for the long term now.
Yep.
If Ben's talking more from a short term trade perspective, yeah, there might be a little bit more downside in Woolies, but
Sure.
I wouldn't expect a huge amount more. Yeah.
Yeah, it'd be fascinating on your point to see whether Amazon does enter the market. It's bizarre supermarket, isn't it? Where you don't actually pull out your credit card or your money.
Yeah.
It scans it based
As
on
you go.
video evidence of what you've picked off the shelf,
Yeah.
and then it
think we're a
automatically
bit-
deducts.
I think we're a bit far. We've got a fair way to go before we get to that
well,
that level.
they're doing it in the States.
Yeah, and I suspect it's not working as well as they thought it might. And you remember the last time Woolies fell out of favour was when the rumours were that Amazon's coming to Australia,
Yeah.
and it was going to take over everything in the retail space, and it's just not the fact.
And the time before that was when
big
Audi
investment.
was coming to Australia.
Audi
and Lindell. And everyone was
Lindell.
freaked about
Well,
it.
now
Yeah.
they're talking again about Lindell, aren't they? It's going to
They are. To me, those guys are the ones that seem to be in trouble. I think Coles and Woolies are so entrenched that the sites that they operate out of, it's like Bunnings, it's almost impossible to replicate those sites. So the long-term threat is probably people going online and buying bulk products from Amazon, but
Yep.
that's going to be a long, slow burn.
But Costco's in Australia, and
Yeah.
that's a bulk thing. But
Yeah.
people,
You gotta shop
anecdotally,
it.
my wife goes to Costco once a quarter to buy the bulk stuff.
Well, it's
'cause
probably
there
got to schlep it
are
out
three
to the,
kids
to
that
the outer
eat
suburbs,
like
haven't you?
wouldn't believe. Yeah, well, it is. It's a bit of a hike. Number
Yeah.
one. Number two is you've got to have the storage space, and a lot of people
Yeah.
are
Indeed.
scaling
Have
down
that.
into apartments
Yeah,
and
good
things
point.
like that. So buying bulk is not as popular as people might have thought in the past.
All right, so that is our stock of the day. Coles. Right,